Dan Ives, obviously the perma bull on Tesla and made the case for the 420,000, as Renita said, or at least hitting that number because of those price cuts. But one thing that he did say in the note, because I was reading it earlier, he was saying that because the macro remains so uncertain, he wouldn't be surprised to see additional cuts, both here in the US and in China, for Tesla to further stimulate consumer demand.
In this video, the Tesla Q1 deliveries hype train rolls on, and some updates about the $7,500, soon to be less than $7,500 EV tax credits available to Tesla and many other automotive manufacturers in the United States. The major change happening on the 18th of April. Plus, last chance to submit your questions for the latest Tesla-only Q&A over on Patreon. If you're not a member, you can join with the card in the corner or the link in the pinned comment.
And of course, some of the classics carving the path for us, Tesla namely. Renita, what's the latest? Is it pure just kind of speculation, or do we have some reason to think this next deliveries report will be big?
There is some reason to think that, and it's all down to the price cuts that Tesla's made over this year with its Model Y and Model 3, I believe, and also the other ones, that the excitement of it may be continuing to come back over. We're talking about Wedbush Securities, who says that they expect, we're talking about Dan Ives, of course, he expects the deliveries report on Sunday to come in better than expected, and for Tesla to reach or get closer to that quarterly value that it's wanted to reach for a while. But also, he says there's potential for upside depending on the logistics around deliveries on Sunday, and that he's expecting that 420,000 units for the quarter to be able to be achievable. He's saying that the stronger demand will come from the key China region, of course. Now, meanwhile, there's another piece of news today floating around about Tesla, about a recall to its semi-truck. Now, the National Highway Traffic Safety Administration said that about 35 Tesla semis were manufactured with a defective electronically controlled parking brake valve module. That is a mouthful, right? And so the truck can at times miss or fail to respond to the parking brake's engagement or disengagement.
So it turns out production is hard for everyone on every product they ever make, especially a brand new platform like an electric semi-truck. What a surprise. Remember, everyone's going to have the same teething pains when they release their first, second, third or fourth product, except Nikola, because they produce the greatest trucks the world's never seen. Sorry, they make computer renderings of the greatest products. I don't think Nikola will have any issues with their production, because they're probably not going to actually get to volume production and still be solvent.
You know, the one thing that popped out to me going from the recalls back to these quarterly numbers that we possibly or should get on Sunday for Tesla, Dan Ives, obviously the perma bull on Tesla and made the case for the 420,000, as Renita said, or at least hitting that number because of those price cuts. But one thing that he did say in the note, because I was reading it earlier, he was saying that because the macro remains so uncertain, he wouldn't be surprised to see additional cuts, both here in the US and in China, for Tesla to further stimulate consumer demand. So I think that's something that'll be interesting to look out for, because obviously it can impact demand, but it can also impact margins. So when Tesla actually reports earnings next month, that's obviously going to be a key focus. So, you know, they've already had quite a few price cuts, so it'll be interesting to see if they do continue with that.
Spoiler alert, there will be more price cuts. How do I know? It's kind of in Tesla's master plan. Reduce the cost to produce the vehicles, pass those cost savings on to consumers with lower prices, sell more vehicles, repeat. It's kind of how they scale up their production and their vehicle sales to 20 million vehicles per year by 2030. Expect more price cuts. In fact, expect endless price cuts from Tesla over the long term.
But he says the macro remains uncertain. A recession could likely be on the doorstep. However, Tesla is now well positioned with its price points and demand outstripping supply so far in 2023. So reasons for bullishness, but not without definitely a cautious tone there.
Okay. Market's going with just the former part, with the bullish attitude. Thanks, ladies. This is Renita Young and Caroline Woods. Appreciate it. Tesla, the leader in the market. And that's pretty much all you need to know. Bulls following suit.
The Treasury Department just out with new tax incentives for EV battery production, a market dominated by one country right now, and that's China. Phil LeBeau has the details and whether this could be the long-awaited boost to EV battery production here in America. Phil.
It will be, Don. There's no doubt about that. The question is, how quickly will we see that production, not just of battery packs, battery cells, but battery components? How quickly will it ramp up? So here are the new EV tax incentives that go into effect on April 18th. Remember, the most you can get is $7,500 if it's built here in the U.S., but it comes down to the battery. If the 40% of the value of the critical minerals in that battery are processed or sourced in North America or free trade countries. If that happens, then you get $37.50. Then it ramps up by value up to 80% by 2027. The other part of this, it comes down to the battery components. We're talking about cathode, anode, copper foil. If 50% of the value of those battery components are coming from the U.S. or free trade countries, then you will get another $37.50. And again, it ramps up to 100% by 2029. So what's the real implication in terms of how many people, or actually how many vehicles, that's really what we're talking about, will qualify for the full $7,500 or even $37.50? We're going to see a hit in the number of vehicles that can get that, and that may impact EV sales, at least in the near term, maybe the next year, year and a half, because so many vehicles will not qualify.
So I've just popped over to the Tesla website to show you guys how Tesla is currently addressing this. Let's zoom in a little bit. Update, the $7,500 tax credit is anticipated to be reduced for Model 3 on April 18th. Take delivery now. Learn more. So let's learn more. We'll get straight to the point here. The federal tax incentives for vehicles. On January 1st, 2023, the Inflation Reduction Act of 2022 qualified certain electric vehicles for a tax credit of up to $7,500. Based on the new guidance, the $7,500 credit is now anticipated to be reduced for the Model 3 rear-wheel drive on April 18th. The Model 3 rear-wheel drive being the most affordable Model 3. So, regarding new vehicles, customers who take delivery of a qualified new Tesla vehicle and meet all federal requirements are eligible for a tax credit of up to $7,500. Based on the new IRS guidance, the $7,500 credit is now anticipated to be reduced for Model 3 rear-wheel drive on April 18th. In addition to income caps, the price cap for the Model 3 for the $7,500 credit, $55,000, and the Model Y, $80,000. For used vehicles, eligible customers can receive a tax credit of up to $4,000 or up to 30% of the purchase price, whichever is less. Price cap, $25,000. Now, at the end of the day, Tesla doesn't need these incentives. They'll take them, and as a Tesla investor, I'll certainly take them as well. But it's a little bit strange how aggressive the timing on these incentives are. Obviously, this legislation is as much about signaling virtue as actually making stuff happen. And why would I say that? The timelines are just too aggressive. Most vehicles assembled in the United States by US manufacturers won't qualify for the full tax incentive. Why? Because they're still getting a lot of their materials, batteries, from China. And there's no magic button these companies can instantly press to suddenly start sourcing batteries elsewhere. It will take years for them to build out the local supply chain and the local battery production. A little bit of a head scratcher here, but again, Tesla doesn't need these incentives. They're still going to sell every vehicle they make. This doesn't hurt Tesla so much as it hurts their so-called competition. It's just a bit weird. It's like, hey everybody, here's this big incentive. Oh wait, it's April 18th. Oh well, yeah, you guys need to localize your battery supply chain now, otherwise no incentive for you. You could do that straight away, right? You just press a button. Oh, well, you can't just press a button? Oh, well, too fucking bad.
So much is sourced in China, still sourced in China, or processed in China. And then the battery components, while there is some coming from here, a lot of it is still coming from China.
Just wanted to take a moment here. I noticed an interesting sales forecast for EVs from who? LMC Automotive. I just wanted to call out LMC Automotive because they're going to be really wrong, embarrassingly so, to the downside. Reminder to roast in 2030. These geniuses at this point in time are forecasting in the United States a mere 6.5 million electric vehicles sold in 2030. So the first question we need to ask is, how big is the US light vehicle market? Spoiler alert, give or take 14 to 15 million. In other words, they're expecting about half of all new vehicles sold in the United States in 2030 to be electric. Dear LMC Automotive, please explain what the other 50% will be, because they will not be internal combustion engines or hybrids or hydrogen. They won't be Nikola-powered only works going down a hill vehicles either. I do not know what planet these folks are on. Okay, I'm just kidding. I know what planet. It's called We're Experts. Trust our forecasts. We're never wrong about anything, except every time we make a forecast, we're wrong. And we don't learn from our mistakes. And we're not looking at any evidence. We're not thinking at all. We're just doing a linear projection because we're morons. I mean, really. Every time I see these idiotic expert predictions, and I am using the term expert in a derogatory manner, I just want to claw my eyeballs out. It's 2023 and these idiots still think that half of the vehicles sold in 2030 won't be electric. We've covered this a million times. They're commercial inevitability. I mean, I don't understand, bro. Someone remind me early 2031 to come back so I can roast these idiots just based on how wrong they were and the fact that I could see it 7 years out. Unbelievable.
Though, when you look at somebody like Tesla, as you take a look at shares of Tesla, which, by the way, will report its deliveries for the first quarter over the weekend, Tesla gets its cathode, which is the most valuable part of the battery cell. That comes from a supplier in Japan. So Tesla is likely to have at least 3750 still applied to its vehicles. All of the automakers, Dom, they're figuring it out. And by April 18th, we will know what vehicles will still qualify for either 3750 or 7500.
And of course, that is tax day here in America, April 18th this year. That's the significance there. Phil, stay with us. Let's also bring in George Janarikis, an analyst over at Canaccord Genuity. George, as Phil mentioned, Tesla is dominating EV sales in the U.S. That stock is the best performing stock in the consumer discretionary sector in the first quarter. You have a buy on the stock. Do you see these new rules as the Treasury lays them out as a catalyst for Tesla and maybe the EV producers writ large, the sector as a whole from here?
Before we hear from George, here are my 2.5 cents. Not only are these incentives absolutely unnecessary, total waste of money. Why? EVs are a commercial inevitability. They're almost at price parity. Soon they'll be cheaper than comparable ICE vehicles. You don't need to be a fucking genius to figure out if it's cheaper, better, safer, and better for the environment. What's a consumer going to pick? A more expensive, inferior, less safe product that's also worse for the environment? Or the vehicle that's actually better on literally every metric you can name? On features, on functionality, on performance, on safety, and better for the environment. It's really not that difficult to figure this one out. EVs are happening already. It bothers me deeply that people don't seem to understand this. It bothers me deeply that there are governments banning the sale of internal combustion engines by a certain date. It's totally unnecessary. Just imagine, we're paying people thousands of dollars to get a computer and connect themselves to the internet back in 1995. Because the internet's happening, but we need to accelerate the adoption of the internet because it's not going to happen on its own. It's just so dumb. It's happening anyway. The point, money's being pissed away. And more important than that, the only thing that these incentives will do is push slow automotive manufacturers who are years behind into accelerating the localization of their battery supply chain. That's about it. And this too would have happened because if it didn't, these companies are out of business. I wish governments would spend money on things that matter and not piss money away on things that don't. It's just so unnecessary. But as I continue to say, as a Tesla shareholder, I'll fucking take it.
Look, I firmly believe that Tesla has done the Treasury's job for it. I mean, if you remember earlier this year, they cut prices materially across the board to spur demand because they had seen a weakening at the end of 2022. And they're able, hopefully, to maintain their margins, auto margins at least 20%. So through innovation and through constant cost cutting, Tesla has spurred market demand through price reductions. And so that's why they're the leader in the space. That's why we think they'll maintain the increased market share throughout the year. And as a matter of fact, we pulled some data from China together from Q1. And as far as we can tell, the Chinese auto and EV market has weakened materially, but Tesla has actually could be up sequentially in China, which would be an incredible feat.
Now, this is an important point. Recent data seems to suggest the arse is currently falling out of the Chinese automotive market. Yet Tesla still selling a shit ton of electric vehicles. In fact, as George points out, perhaps sequential increase in deliveries despite the overall market collapsing. What does this tell us? Tesla is not like the others. Of course, we kind of knew this already. Oh, and in totally unrelated matters, for some strange reason, I kind of feel like a couple of years ago, I pointed out that a recession was the best thing that could possibly happen for Tesla, and it would also reveal the extent of the underlying demand for their products. While others saw their sales collapse, Tesla would continue to sell through all of their production. People thought I was crazy, but I'm used to that.
And that's on the back of their price cuts, which has led them potentially to increase market share in Q1.
Okay, so George, I guess I'm curious from a bigger picture, macro perspective, as you lay out the case for EVs here in America, at least. How important are tax credits to the growth story of the U.S. EV makers or North American-based EV makers as opposed to those coming out of China? The reason I ask is because it appears as though China's EV manufacturing is rivaling U.S. EV manufacturing. And is that a spur of demand because of these tax credits, or do they largely not factor into the global story for many of these makers?
No, I think they matter a lot. They obviously matter for Tesla too, but less so because Tesla's been able to bring down their prices, and they haven't had the benefit of the $7,500 for a couple of years at least. But to answer your question directly, these tax credits are important. I think what the government is trying to do is balance spurring the demand for electric vehicles while at the same time compelling companies to bring back production of batteries, cells, and components to the United States. So they are important.
Strongly disagree. Now, it's true. This is forcing dumb-ass legacy automotive manufacturers who are years, perhaps a decade late to the party to start localizing some of their battery supply chain, which they would have needed to do anyway, because where the fuck else are they going to get the battery materials from? Because there's not going to be enough available for everyone unless they take matters into their own hands. That's not spurring demand. That's a low-key bailout for these companies, which might prolong the amount of time they can survive until they eventually go bankrupt anyway because they're inept and they were way too late to the party. This will spur localization of battery supply chain, but it's not meaningfully going to change demand. As Tesla have pointed out, there's already quasi-infinite demand for their products, which happen to be electric vehicles. These incentives may temporarily help some of Tesla's so-called competition to provide the illusion of competing, especially on price, but this isn't meaningfully pushing consumers over the line. Remember, Tesla has incredible pricing power. They dictate their own future. With or without incentives, Tesla can see their order flow, their inventory, their production rates, and dynamically adjust pricing to continue selling through production with industry-leading profit margins. Whether they're 20%, whether they're 18%, whether they're 35% margins, doesn't matter. They'll still sell everything. Not a single additional Tesla will be sold as a result of these incentives. Now, you might argue maybe one or two Ford Mustang Mach-E's or this, that, or the other vehicle will be sold as a result. But it's important to understand that Tesla's so-called competition are losing money on every vehicle sold. With these incentives, they may be losing a little bit less money. But these companies know they need to sell their vehicles at comparable prices to Tesla vehicles in order to sell them at all, but behind the scenes, they know they're going to be losing tens of thousands of dollars per vehicle sold. So once again, this isn't helping these companies to sell more vehicles. They're barely making any in the first place. What it means is the catastrophic losses they're realizing in every vehicle sold will be slightly reduced. It's got nothing to do with consumers buying them or demand. It just means they lose a little bit less money for a while. It's the job of these automotive manufacturers to make their vehicles affordable by driving their costs down. That's their job. Some are doing better than others. These incentives are absolutely unnecessary in terms of selling electric vehicles. The prices are coming down. The technology is improving. The batteries are becoming more efficient. There's more innovations in terms of manufacturing. And all of these automotive manufacturers, including Tesla and others, are going to benefit from economies of scale. Again, back to the analogy of the internet. You didn't need to incentivize people to start using the fucking internet back in 1995. Nor do you need to incentivize consumers today to buy electric vehicles. Global EV production is nowhere near demand for EVs as it stands today. And as global production scales up, everything is going to come down in costs over the long term. The obvious argument that dingbats will make here is, oh, but not everyone can afford an electric vehicle now, you dumbass. Obviously, if they're cheaper, more people can buy them. Are you stupid or something? To which I would respond, let's think about this. There is a gap between today's levels of electric vehicle production, a little over 10 million vehicles per year globally. The gap between the 10 million globally and the 80 million globally, that's a massive increase in the number of electric vehicles being produced. And what happens when the number of vehicles being produced increases? Every company producing these at higher scales benefits more from economies of scale. And the industry as a whole innovates in terms of techniques for manufacturing these things more affordably, deleting parts and processes, copying Tesla's gigantic casting, trying to mimic their heat pump. So by the time production has doubled and then doubled again, the cost will have fallen significantly, meaning the people who can't afford an electric vehicle today in the future will be able to afford an electric vehicle. Let me make the most extreme example just to illustrate the point. Imagine there was a $50,000 tax credit to buy an electric vehicle today. The question, would this sell any additional electric vehicles? No. Why? Because there's already demand far in excess of supply globally, and as supply scales up, prices come down, meaning there's even more demand. All a $50,000 tax credit would do is cause the wait times for the purchase of a new electric vehicle to blow out to about half a decade or more. Once again though, as a Tesla stock investor, governments want to piss money away and throw it at Tesla, I'll take it. Even if it's unnecessary, I'll take it. They don't need it, I don't need it, but we'll take it. I think there was something else. Oh, that's right. You guys have got to try Athletic Greens AG1. It's an excellent way to fill in nutritional gaps, which everybody has. 75 high-quality vitamins, minerals, and whole food source nutrients. There's prebiotics and probiotics, digestive enzymes, and adaptogens to help you cope with stress. Such a simple habit, one scoop once a day, every day. It's that simple. Athletic Greens AG1 will have you feeling and performing your best. And if it doesn't, there's a 90-day money-back guarantee. So what's the worst that can happen? Plus, if you use the link at the pinned comment or head to athleticgreens.com/SMR, get yourself a 1-year free supply of vitamin D3 and K2. Here are what some viewers of the channel have to say about their experience with AG1. Day 30 of AG1, and I cannot explain to you how much better I'm feeling. My social anxiety is so much better. I did not expect to help so much, but it has. I feel energized, ready to do things. I've been staying on top of things for the first time in years. If you haven't tried it already, truly try it. I was a skeptic. I did not at all believe it was going to help, and it has, significantly. AG1 is totally amazing. No more ibuprofen, no more leg cramps, much less back pain, feeling better and more energy. This is great, and I'm only 2 weeks into AG1. It really works. Thanks, Stephen. You're welcome. I noticed 3 things with AG1. My chronic heartburn is gone. My digestion is more regular. I have more alertness, and I wake up with a raging heart on every morning. I hope you're putting it to good use, my friend. Just received my second pouch of AG1 and find improvement in short-term memory and not napping during the day as I did pre-AG1. Worth the price. Regarding AG1, okay, so I couldn't ignore all the talk. It's been about 3 months now and I've literally stopped drinking coffee because of it. Not even intentionally, I just don't need it now. Strange. Not that strange, AG1 will meaningfully boost energy, at least in my own experience. That's the biggest benefit I noticed almost immediately. So what are you waiting for? Head to athleticgreens.com/SMR or use the link in the pinned comment. Start your daily health habit now and let me know how you're feeling in a few weeks. If for some strange reason you don't get the results you're expecting, there's a 90-day money-back guarantee, so what do you got to lose? Oh, that's right. Nothing. And don't forget, Tesla only exclusive Q&A happening on Patreon very soon. Submit your questions now. Submissions won't be open for much longer. If you're not already a member, you can join with the card in the corner or the link in the pinned comment, and I'll see you over on Patreon. Love ya.